Good morning, everyone, and welcome to my technical analysis for the gold and silver market as well as the crypto market. Keep this very short and simple. And really, I just want to highlight on the precious metals more than anything else. I wanted to highlight the rate hikes. We're expecting a rate hike on Wednesday. So we are. So I wanted to highlight what happens. Obviously, during when rates are going up, you normally see a stronger dollar. That's not what we've been seeing. We've actually been seeing a weaker dollar every time they raise rates. I'm assuming that the dollar went up way too fast, maybe overbought, and it since then has broken significant levels. We'll also take a quick look at the US dollar as well. All right, so let's get the gold out of the way here. So gold, the first rate hike was in December of 2015. We saw a rate hike on the 16th of December. We actually had a green candle on the 16th, followed by a red candle, and really marked the floor for the precious metals, right? So market traded in this range here, and then it broke out. The second rate hike came a year later. We had a red candle here in the precious metals market. Then we found a little bit of a floor, and it looks like we started building a trend, right? So the market went up again. So you had a huge rally from 1050 all the way to 1375 within a 6-month period, really, within a 7-month period. Then we had the rate hike, another rate hike, and we had a rally from 1125 all the way to 1265. So again, $100 rally, a little bit over $150 rally. The third rate hike was over here. We had actually a very nice green candle on that third rate hike. The fourth rate hike, and again, you had a big move up. This seems to be the only rate hike, the fourth rate hike, which happened in in June 14th, 2017, was the only rate hike where we actually saw a dip in the market, right? And it wasn't really a big correction. We came down from 1265 to 12. So we lost $60 on that rate hike, but we ended up finding a floor roughly in July, and we rallied all the way to 1357 from 1200. So again, another $150 move to the upside. The last rate hike we saw was the fifth rate hike. This was in December 13th, 2017, and again was a big green candle, and we're expecting rates to go up again. So based on the last 5 rate hikes, we've had nice moves to the upside. Really, this was the only rate hike that was lower than the previous rate hike as far as price is concerned, right? So again, the only rate hike which was lower than the previous rate hike. Now, what I'm assuming is that we're going to have a rate hike within the next 2 days, right, on Wednesday. What I'm assuming is I'm hoping that we're going to find a floor somewhere around here and continue to go higher. I mean, based on all of the other moves, I wouldn't be surprised to see another $150 move to the upside. So again, from here you had a $300 move. From here you had about a $150 move. From here, 1200 all the way to 1295, $100 move. This was the only negative move to the downside, which was only a $50 to $60 move. We still found a floor, and we're able to move $150. And here we are at 1250 with a move to 1270.65. So again, $110 move to the upside. I'm assuming that if we do see this rate hike, which again the market is expecting, that the market worst case scenario will come down here, maybe a little bit lower to find support within this trend line here, and then from here find that big move. If we're lucky, I think what we will see is I don't think we'll see the dip that far. Maybe it'll come down to here and then continue to go higher from here, right? Higher than this one. But again, we got to keep all of our options open, and there's a chance that this thing can go down to this trend line, test this trend line, and then from here move much higher. Okay, that's what I'm expecting here for the gold market. I think these rate hikes are being very positive for the precious metals market. And as of right now, right, let's clear this up a bit. And like I said, we're looking for support to hold here. If support breaks, if we see a move down below this level and we see a close under 1225, 1295, then this could go up, test it, and come back down. Again, like I said, I'm expecting the market to continue to go higher. That's the gold market. Let's look at the silver market here. The silver market also trading within a nice pennant flag. So again, this was the last pennant flag, came down. The last pennant flag from here, this was back in 2016. We had a really nice move up from $14 all the way to $21. I mean, more than 30-40% up move to the upside. And again, I'm going to stick with my prediction. I think this market will continue to go higher. And I think this year, by within the next 6 months, I'm looking to test the 23 to the $26 range, this area here. So again, nice formations here happening in the silver market. Let's look at the Ripple. I've been making a recommendation to buy Ripple here. I like Ripple. If you saw last night, I posted on my blog that I'm looking for Ripple to find support. Ripple's been moving down here pretty quickly. I like this area. I've been saying that anything under $1 I think is a great buy. And again, we have a little bit of a trend line here. I think you can see it more clearly here. This is the trend line here. And we can see here that I posted it when we were at roughly around 56. I was looking to find the floor there. And since then, we had a nice move up. So you're up already. It went down to 54 was the low, and now is up to 67. So again, big candles on the smaller time frames. Again, we really can't really measure the long time frames, the big time frames, because this is too new of a product. But we've already broken this downtrend. So I'm hoping that we can see a move up to 80, maybe come back down, retest support, and continue to go higher. Again, I really like Ripple. I think Ripple is an amazing opportunity, just like silver, just like platinum right now. That's your Ripple market. I love this area here. If you haven't bought in Ripple, you should definitely pick up some Ripple here under 85, under 95 cents. I think it's a screaming buy. And I do believe this market is going to go much higher within the next 12 months. Let's look at Bitcoin. Bitcoin, same thing. Bitcoin, so it looks like Bitcoin is finding some support here at around the 7,900 area. We've already broken this downtrend here on the smaller time frames, right? So again, we saw a lot of buyers, nice big candles here, and we've already taken out the first high. On this chart here, this chart is looking bullish. I like this chart. I think this chart can go up to back to the $10,000 range or to the high $9,000 range. Let's look at the Dow Jones. The Dow Jones, I still believe, is still trading within that pennant that we've talked about. Again, being very respectful towards this pennant. You can see that we're just trading in a zigzag here, and it looks like it's starting to break. A break below this level here, below the 24.5, could probably bring this thing down to 23 again and test lower highs. Lower lows and lower highs. If it breaks to the upside, if it breaks above 25.5, then we can see this test this area here. I don't think is going to have enough legs to go above 27,000. We'll see what happens. And besides that, let's look at one more. Let's look at the US dollar. So again, like I said, the dollar has been having a hard time getting above the 90, 75, 90, 91 area. I did an analysis not too long ago where on the chart I saw this candle here was missing. You see this candle here was missing. Sometimes the market has gaps, and these gaps usually tend to fill each other. Now, sometimes what happens is that the chart, the folks that are making these charts happen, they fill in or maybe I don't know if it's the system or whatever. But the whole point is this candle wasn't there, and I made an analysis probably. I would probably say sometime in January of 2017. And I stated that this candle here was missing, was a gap. This was a big gap. These gaps usually tend to fill each other. And because of that gap, I targeted at least 91.80 before the move down to the bottom. Since then, a couple months later, that candle appeared. Now, if the case was where the chart was missing the candle and they updated it, or if it's a real gap and then they just updated it anyway, we can technically see this move go back to the 91.70, 91.80 range, right? Because that's where the gap would be filled. But if the case is that this was just an error on the chart side, then this is not a gap at all. This candle does in fact exist, and from here we can see the market move down further. If that's a gap, then we might see this move over here, fill that gap right here, and then make its descend. All right. Ultimately, if I'm looking at this US dollar, no matter how you look at it, this is a very ugly chart. I've already talked about the broadening formation, and I think a move to the 91.5 range coming back down, I think it would be really positive. But ultimately, it doesn't matter because the dollar is just broken very, very, very nasty levels. Again, there's your broadening formation, and like I said, I'm targeting, the first target is 94. That's resistance, now turn support. And the second chart is the origination of the move to the upside. That's about it, guys. I hope you guys enjoyed the video. We'll see you guys next time. Bye-bye.